The tweezer bottom candlestick pattern is a 2-candle reversal pattern that is bullish when it appears in a downtrend. And remember that we're defining a downtrend as the presence of a new 10-day low. To be a tweezer bottom, the first candle should be a strong black down candle whose body is at least 50% of the total range. The second candle's low should equal the first candle's low, and it should close above the previous candle's close. So this emphasizes bullishness and a complete switch over from bears to bulls, where price was unable to break the previous swing low. Here you can see an example of the tweezer bottom candlestick pattern in copper. You can see that the pattern picked out the bottom perfectly in this example. But as you'll know by now, one good chart does not mean this is a perfect signal. So let's test the pattern on historical data to find out how good it really is. The idea of a tweezer bottom is to go long after the pattern has been identified, as it's supposed to predict a bullish move to the upside. So now we've put the pattern into code, we can test it on our historical database between 2000 and 2016. On the left, the table reveals that buying the close of a tweezer bottom pattern and exiting the trade after 1 day produced an average gain of 0.13% in a selection of 20 different markets with an average win rate of 54%. Our best result here came from a trade in crude oil. Across 100 US stocks, we didn't do so well and saw an average loss of 0.1% per trade with an average win rate of 45%. With a 3-day holding period, we saw an average gain of 0.49% in futures and currencies with an average win rate of 64%. And in stocks, we saw an average gain of 0.06%, which was worse than our benchmark return. However, with longer holding periods, the results are much better. With a 5-day holding period, the tweezer bottom preceded an average gain of 0.44% measured from close to close across our 20 markets with a healthy win rate of 61%. In stocks, we recorded an average gain of 0.95% per trade with a win rate of 54%. Looking at the 10-day holding period, we saw an average profit of 0.7% in futures and forex with a win rate of 58%, while in our stock universe, the pattern produced an average profit of 1.7% per trade with a win rate of 54% across 257 signals. Overall, the tweezer candlestick pattern may offer some clues to a bottom when viewed within the context of a decent time horizon. However, this is also another rare pattern, so some more research may be needed. Following is the equity curve for the last result in stocks, so you can get another perspective on the performance that we recorded.